Sage here for Kalkine Media. Please subscribe to the channel and press the bell icon to be notified of the latest videos. Today's topic is what is the average return of ASX 200? The Australian Securities Exchange, or ASX, is among the leading 10 stock exchanges in terms of market capitalisation across the world. The stock exchange was established in 2006 by the merger of the Australian Stock Exchange and the Sydney Futures Exchange. The ASX 200 constitutes 200 largest companies listed on the ASX, and the index, which is considered the benchmark for the Australian equity performance, is composed of 200 large ASX stocks. The ASX 200 is maintained by Standard & Poor's and is rejigged quarterly. The companies listed on the ASX 200 represent sectors such as materials, resources, financials, real estate, banking, etc. And these companies together add up to over 80% of the Australian share market's market cap. Over the years, ASX 200 has given healthy overall returns, while a few years were a little disappointing for the shareholders. Still, investors have relief of getting steady income via dividends during the years with muted returns. ASX 200's historical returns 2010 to 2020. Between 2010 and 2020, the benchmark index delivered 5 negative returns. In 2010, it was negative 2.57%, 2011, negative 14.51%, 2015, negative 2.13%, and 2018, negative 6.90%, as well as 2020, negative 1.45%. In 3 out of 10 years, the annual return was more than 10%. 2012, 14.6%, 2013, 15.13%, and 2019, 18.38%. In 2 out of 10 years, the returns were over 5%. 2016, 6.98%, and 2017, 7.05%. Returns were just over 1% in 2014, being 1.10%. And the above calculated returns do not include any dividend payment or any stock spin-offs from the original stock. The calculations also do not consider taxes and commissions. And meanwhile, based on S&P Global data, which assumes reinvestment of all dividends excluding the value of franking credits, ASX 200 has mostly given healthy returns since 2010. ASX 200 gave negative returns of 10.84% and 3.13% in 2011 and 2018, respectively. The year 2019 gave a return of 23.02%, and the years 2016 and 2017 gave returns of 11.45% and 11.46%, respectively. The year 2012 and 2013 gave returns of 19.88% each. ASX 200 in financial year 2021. The benchmark ended the financial year 2020-21 with a positive rise in 11 out of 12 months. The performance of the index beat that of the mining boom in the financial year 2006 to 2007. In financial year 21, the benchmark index surged 24%. The same financial year was also the best since 1987 for the broader All Ordinaries Index. The rally was boosted by a rebound in the domestic share market following the sustained weakness due to challenges posed by the coronavirus pandemic. And meanwhile, the Commonwealth Bank of Australia Limited, BHP Group Limited, and National Australia Bank Limited, as well as CSL Limited, Westpac Banking Corporation Limited, and Fortescue Metals Group Limited, as well as Rio Tinto, Afterpay Limited, IDP Education Limited, and Australia and New Zealand Banking Group Limited are the top 10 biggest companies by market cap listed on the ASX 200. Thanks for joining us on the report. Hopefully it's been informative for you. And if you do like the information, please like, share and comment on the video below and subscribe to the YouTube channel. Press the bell icon, you'll be notified of our latest videos. And for more information and regular updates, please head to the website kalkinemedia.com. And this is Sage here for Kalkine Media.